A warm welcome to our session today. My name is Hakan Eroglu. I'm the Global Open Banking Lead in Mastercard Advisors. I'm very honored to chair today's session on how open will change the industry. So we're not going only talk about open banking. I mean, open banking is the name of the conference with as Open Banking World Congress, but we are more and more talking about open finance, but also about what happens with other industries that are going to face openness. Some of the industries have faced openness already in different shapes and forms, but I think we see also development of more initiatives of industries, of different associations and bodies thinking about openness in their industry. How could they innovate? How could they create new services, bringing different industries and data pods together and create a kind of a tremendous opportunities in the market. So we will have a set of great speakers from the market. I will later on introduce you to Will Mason from Experian. We will have Eyal Sivan from Xway, Hayden Sutherland, Marcus Myers from Open Transport Initiative, but also Simon Healy, and last but not least myself with my point of view on openness in different industries. Let me first introduce you to Will Mason from Experian. He will be talking about openness openness in finance. So that would be open finance. But it's not only about to talk what are the use cases, but it's also about how agility and different type of mechanisms in companies can help to build new services in open finance and create new revenue streams and different opportunities for clients, but also for different players in the market. So let me introduce you to Will Mason. It will be a pre-recorded video, so the presentation will be pre-recorded, but Will be available here in the session today. So I'll welcome him. And please send your question in Slido with #TrackA2 so that we can have a quick Q&A session after the video. Thank you.
Hi, my name is Will Mason, and I'm a director in the consumer data side of Experian. I'm here to talk to you about making the most of openness in finance. I came to Experian through the acquisition of a company called Rumpa, who are involved in the early stages of open banking. I spend my time for Experian exploring new areas to invest in supporting our strategic ambitions and growth initiatives. Experian has been engaged in open banking throughout and are actively involved in a number of open finance working groups. Why? Because as we go through product development, we look at how we can unlock the power of data to create opportunities for our consumers, businesses, and the rest of society. And open finance is a key growth enabler of that. So what is open finance? A lot of people around the world listening in probably don't have great visibility on what the open banking ecosystem is in the UK. Open banking was led by PSD2. It's payment-related accounts, so all the ones you can see on the left. Open finance is the rest of the financial landscape. Pensions, investments, savings, insurance, protection, mortgages, credit lending, and increasingly thinking about utilities as well. It's in its early stages in the UK, but it's gathering real momentum. And people around the world will be looking at us to see whether what we do is good or bad. So the pressure's on us, but we've got a real opportunity to show thought leadership in this space. As we progress through open banking, traditional businesses, third parties, and increasingly end consumers have learned about the value of open banking and the changes that are required to operate in this new market. Rather than play out a view of open finance and where it's going, I'd like to discuss the things that need to be considered when you want to build products in open finance. So the global movement towards open banking is definitely a very empowering innovation. It's benefiting consumers and businesses by unlocking access to data, but it's also benefiting third parties and the traditional businesses it's opening up. Banks that we talk to who are embracing openness are seeing a step change in their customer engagement strategies. Openness has developed options for the future, for engagement, and for the way they monetize and create new business models. Open banking regulation forced the initial development, but as understanding around the opportunity has grown, the traditional businesses are embracing the change. API enablement has created opportunity for the builder, as well as the surrounding ecosystem. and many of them are now monetizing the next wave of API development. Openness creates a number of disruptive dynamics to consider as you're designing new products and business models. Open banking and open finance has created the democratization of data through the data access. The loss of data exclusivity has disabled the incumbents' traditional business models. Those traditional business models are therefore losing the primary relationship with their consumer, and they run the risk of becoming a utility. Through that, we're seeing the compression of traditional profit pools as consumers' value is distributed upstream and downstream of the financial products as a vertical and through new models. Trust and loyalty are becoming more fluid as new brands can provide great services more quickly. Consumer brands will always win out in this process. And one way for traditional businesses to protect themselves is through partnerships, but we'll discuss that a bit more later. We've also seen the fragmentation and unbundling of value chains, and that has created further disruption to the established business models. The unintended consequences of this is that arguably it has been too successful. We now have so much competition that consumers are finding it hard to choose between products and services. That stimulates markets for partnerships, and again, the consumer brand will very likely win. Data access has also enabled the commoditization and automation of expertise through better technology and growing consumer demand for online personalized help. So let's just replay that slide. Openness undermines traditional business models through the creation of new ones. It empowers consumers and businesses to take control of their data and use it how they want to use it. Consumer brands are well positioned to take advantage of this, and that still means traditional businesses can operate in this space. Consumers will only share their data with third parties if the value exchange is good enough. Openness has driven a transfer of power/profit from the financial product as a vertical to a horizontal utility that serves a broader spectrum of consumer lifestyle. That has enabled upstream and downstream value creation and allows banking to span the everyday in an integrated and unobtrusive way. API creation has stimulated greater partnerships, both with the wider market and, importantly, between internal business units in large organizations. The regulatory disruption created open banking, and through that it has created the open data flywheel. By stimulating industry change, it created third-party adoption, which set consumer expectation, grew the ecosystem in its own right, and forced business model change. So as the regulator stimulates that industry change further, it's gathering momentum in the UK, and consumers and businesses now take primary control of their data and use it how they want to use it to leverage value. It's no longer about the banks and open banking. To move towards open finance and open data is dramatically reshaping the environment that we all operate in. To make best advantage of that, we need standardization and interoperability to allow consumers to make the most of it. We're moving towards an ecosystem of open data that presents both risks and opportunities for different actors in the value chain. We all need to keep the consumer and the corporate user first and protect their data above all else. To give the consumer the most benefit, partnerships are paramount, and API enablement will increase the pace of that as an option. Those partnerships allow traditional businesses to access features and speed, and for the fintechs that they're working with to access reach, funding, and learning. But when you look at partnerships, always check whether the value that you seek to create is greater than the sum of the parts. So what does the open data landscape look like? We're seeing exponential growth in open data volumes that we're processing. In the last year alone, we processed over 300 million UK open banking transactions, and we make over 50 million API calls to the open banking ecosystem each month. Thankfully, there is a fast pace to the change that we see in the ecosystem, and that means that consumers are really starting to get proper value from it. To operate in an open data market, therefore requires the businesses to have an agile mindset. For Experian, this is global, and that allows us to think about partnerships, investments, acquisitions, and product development with a global mindset. To the right, you'll see a flavor of this across Asia-Pac, EMEA, UK&I, North America, and Spanish LATAM. There are foundational capabilities in open finance that are a necessity to operate and build great products. Value to our clients and their end customers is created from those foundations, not in the foundations themselves. And to give consumers the best value, they should be able to combine open data with other personal data sources to derive value-added insights. To operate as a foundation, we started building the Open Data platform. The foundational capabilities for us are the ability to aggregate data, the ability to manage consent, and deliver robust non-functional requirements in a highly regulated market with clients that operate at significant scale. The Open Data platform does that for us. We can then build products on top of it to focus on customer and client value. When you think about choosing an aggregator to partner with, think about the following things. Does the platform aggregate data beyond payment accounts, so beyond open banking? In ours, we include score and report, access to Experian data, identity and fraud, marketplace data, alongside a domain model that includes pensions, investments, savings, auto, insurance, mortgages, all the way through to council tax and utility bills. Does the platform provide data insights, data enrichment, data storage, data management, consent, and audit? Does it normalize the data and make it easy to consume? Does it hide the data and manage the change for you, limiting you to as few breaking changes as possible? Really importantly, does the platform allow you to operate under your own regulatory permissions? And if so, do they operate the platform with the robustness that you would expect with your name on the regulatory register? Do you trust the brand as a steward of your consumers' data? To take advantage of the opportunity, you also need the ability to aggregate data and make payments. Scalability, security, availability, disaster recovery, geo-replication, performance, all of these things that you expect make a real difference to customer experience. So make sure you check them before you choose a partner. As well as regulatory compliance responsibilities, there is a need for operational excellence in your customer and regulatory engagements. Developer experience is also really important. So is onboarding simple? Is the documentation clear? Can you try before you buy? Do they have things like postman collection and Swagger documentation? Is there dummy data that makes it easy to develop new products? And is there a really clear path to going live? We use the Open Data platform to take products to market quickly and cost effectively. As a platform, it also lets our clients do that. They can respond to the challenges and opportunities of open data by building products that augment internal processes and deliver value to end customers. Successful products are clear on their value exchange when they communicate it to their customers. However, you've got to encourage data sharing, and to do that, you need to make sure that you are transparent, that you build a relationship, that you educate your consumers, and that you reassure them. There are some data points on screen that you can look at. I'll let you read them in your own time. That show the scale and significance of some of the things that we're doing in the UK and across the world as well. Openness drives faster innovation. When we think about innovation, we think about it in three ways. Is it core? Is it aligned to core, or is it significantly new? Our Open Data platform allows us to think about innovation that we used to think of as significantly new as more in our core or aligned to core space. It's not a huge jump for us to take in new product design anymore. We think about it with a different lens. Foundation capabilities are in place to enter markets and new value areas with relative ease through the delivery of core services designed to power varied client propositions with minor configurations. We've got an architecture in place to support connectivity to new data sources, and we've got an architecture there to help us enrich the data, connect to new models, and build new analytical engines. We've got the operational infrastructure processes in place. We do data management, data storage, all of the NFRs that we've spoken about already. We've also got the standards in place to support new regulation. We've got that framework bedded in. We've got the non-functional requirements that are just totally out of the box, and we've got repeatable onboarding and sales processes that work with our aligned sales team. By continuing to invest in innovation, we've been really well placed to respond to COVID-19. At a time of such fast-paced and unprecedented change, our embrace of open data has driven an agility and transparency and openness that has allowed us to help our customer base respond in real time with real-time data. By focusing on the value-added insights and business model design, we have the capability to change direction quickly. By combining different data sets and designing relevant insights, we create value over and above what is possible through aggregation alone. As COVID-19 started to impact UK consumers and businesses, we completed a data-driven reprioritization of our roadmap based on product or features ability to ease, support, and restore the consumer and business population's financial health. We also created new features and product ideas. Our adoption of openness and the agile processes that are demanded of businesses operating in this market allow for this flexibility. New products can be developed in days and weeks, not months and years. We now have 20 plus products and features coming to market that are driven as a direct response to COVID-19. So in summary, there's a lot of risk and a lot of uncertainty in open finance, but the biggest risk you face is not engaging in it. You need to understand the changes that are coming and how they could impact your business. And remember the disruptive dynamics that we spoke about. You need to think about business model and product design in light of those. Openness has created and powered innovation, but demands agile delivery. Test yourself to make sure that your partnerships are creating value greater than the sum of the parts. Design products and operating models that allow you and your customers to take advantage of the change. And think about your architecture. Think about the way that we use the open data platform to help our clients take advantage of that change. And don't get lulled into thinking that what you build will be valuable because you have built it. Test it, validate it, and prove out your assumptions with end customers. Always keep the customer first. Thank you for listening.
Thank you very much, Will, for your great presentation on openness in finance. I think we have just received a question that I would like to ask you, Will, that came out of the audience. That would be, do you have any examples of use cases in the new ecosystem?
Yeah, hi, Hakan. Thanks for that. Across use cases in the new ecosystem, I think we think about it in two contexts. So we've got use cases that Experian are playing into, where we use our open data platform and our categorisation engines overtly see Experian's brand in the journey. And then we also operate as a technical service provider. So where we have clients of ours using the open data platform APIs directly and building their own use cases. So for Experian, when you think about the business that we operate in, think about a lending journey. And we're trying to play open data into every single part of that journey that a consumer engages or an SME engages with a lender. So where we start with comparison data and a best buy comparison journey where you can see credit cards or loans, we're looking at how we can allow the consumer to play open banking data into that comparison journey to help refine the products that are available to them in the marketplace. We're then looking at how we can transfer that data into the originations journey. So they found the product that's most suitable for them based on their personal financial situation. And we want to pre-populate that information into the form or into the originations and decisioning system that the lenders have. And we do that through, by having built a pretty complicated categorisation engine that rolls the transactions up to a view of a customer's affordability. So it derives a significant number of insights across the kind of full transaction base of a customer's account and categorizes the individual transactions so that you can pull out transactions that are of significant interest, whether that's gambling or other interesting data points for your scorecard model. So we're helping with the refinement of an application journey and then through into customer management, where you've got back-end processes allowing for portfolio management, whether that's across your entire customer base or specifically honing in on individual customers who are approaching vulnerability or a collection scenario, but also direct to consumer, where we're using the insights and the analytics that we build to help our clients build personal financial management propositions with the explicit intent of helping them retain, engage, and monetize their consumer base. And the monetization aspect is, again, going back to the beginning of the journey where we use market comparison data to help them float up products that are relevant to the consumer base for them to then go on and apply for that product. That could be a lender's own book of products or whole of market products. So we're trying to play as Experian through the whole process of consumers researching, applying for, and owning a financial product. When you extend that into open finance, the ability for us to play in the asset picture of a consumer's financial net worth is really, really compelling. So take a mortgage application, for example. At the moment, we can do the I&E, the income and expenditure analytics through current account and credit card transaction analysis. We can do the liability side of the equation through the score and report data that we have in the bureau. But open finance will allow us to allow a consumer to present an accurate picture of themselves and their assets when they go through that journey. So we're doing a lot in mortgages at the moment, in particular in preparation for what open finance will mean for us. And that's extending into the wealth, life and pensions market more broadly. Yeah.
But just to add on this one, because you mentioned mortgage, I mean, all of us know how cumbersome and, this process can be, right? First of all, to compare mortgages. So you have your mortgage contract, then you're comparing with other banks, and then find out the best proposition for the customer. Are you playing a kind of a full ecosystem where you are also partnering with third parties and with third party banks, with third party providers in general, and create that ecosystem?
Yeah, so mortgages, but as a background for the business was comparison. So we have a view of the entire products that a consumer can apply for in the mortgage space in the UK. So we can power a best buy comparison journey for mortgage products. We can then use that data combined with a consumer's personal financial information from the Bureau or from Open Finance to help refine the products that they are likely to be accepted for. And we can also pre-populate the journey either direct to lender or through the broker channels and partner with the technology providers. And we're doing that in both originations, where it's all about pre-population and accuracy of data, and making sure that a consumer applies for a product that they can afford to repay, both for consumer detriment purposes, but also for the client to make sure their portfolio is strong. And then at the end of the ownership piece, when the remortgage event happens, we want to be able to use the data to help a consumer understand whether they should stay on the product that they've got at the moment, whether they should move to a product within the lenders or start to look more broadly in the marketplace. So there's a strong use case in mortgage retention and effectively monitoring the use of your mortgage product. Again, open finance more broadly will play really strongly into that, where we start to look at insurance and how that can support a mortgage journey for a consumer, but also taking into account your holistic net worth.
Great, thank you. Any other questions from the audience? I think that one question was, answered. Another one is, any views on what value exchanges are showing promise?
Yes. Never assume that the data is valuable enough in its own right. You have to do something with it. And what you do with it is obviously where you're going to be able to sell incrementally above the others. So our open data platform, to a certain extent, we recognize that the infrastructure play in accessing open data is a race to the bottom from a pricing perspective. And the value that we bring to our clients is the insights and the analytics that we lay on top and how we combine that with other data sources that we're able to access. So breadth of aggregation is important. And then the layers of services that you build on top. And understand your consumer and your client base really, really carefully before you start building the analytics and the value-added services. And then make sure that pricing differentiates you. Don't just go for a cost-up pricing model. Think about how your clients are actually using the information and make sure that you're pricing appropriately for the value that you're providing. But test it with clients, test it with consumers.
Great. I think I've just seen one question that I thought we have answered, maybe more specifically on the third party. So how do you partner with third party providers? So is that you have bilateral agreements? You're onboarding that to your platform, and I mean, what is your experience?
Yeah, both. So we partner through inorganic, so investments. We have a number of investments in partnerships that we make, where we want to tie ourselves strategically to a product or an area of the market that we aren't actively engaged in. So that's an exciting space for us. We also partner where we know that we can't deliver the access and the availability. So let's take SME, for example. We've partnered with a company called Kodat. Kodat provide us access to cloud-based management accounting software packages. And we're able to layer on our view of a SME's transaction data, categorized using our categorisation engine for SME transactions with the Kodat management account information. The value of bringing these two pieces of data together is that we can start to help in a lending decision understand a P&L from a holistic point of view, not just the transactions and not just the management account information. So it's no longer an accounting-led sale, but we can also start to challenge the incumbent's power over the SME lending process, where your bank will naturally have the ability to lend to you more effectively than the marketplace. So in opening up both the management account information and the transaction data, you challenge the accounting, the accountant's ability to help lending, and the incumbent credit card and current account provider's ability to power lending, and stimulate the market, which is the original intent of open banking. So that's one example. But obviously, as I said earlier, through comparison, we have a huge number of partnerships across the financial industry more broadly. And we partner with every single business that we take onto the panel from a comparison point of view. And then we also think about our clients as partners as well. So we're constantly helping them evolve and iterate their products and their concepts and how they engage their consumers. And we share all of the research that we get from our consumer engagement, our consumer research as well.
Thank you so much. I think we have 2 minutes left. Very short answer, maybe, if that's possible. So the last one that I would ask is margin increase the most valuable revenue stream achieved through open finance-driven analytics?
I don't think so. It's one of. No, I wouldn't say so. It is a valuable area. Obviously, we think the biggest area for value for the markets that we operate in is either finding the most suitable consumers for your proposition or not finding ones that are unsuitable. So, I mean, in some respects, that's margin increase, but in other respects, you're actually refining your customer base and making sure that you're playing into the right areas.